Hello and welcome to Wiki Prime. We are here on day 2 of the Global Fintech Fest here in Mumbai. Today, to discuss the payments bank ecosystem and, of course, the payment bank itself, we have with us Mr. Anubrata Biswas, the MD and CEO of Airtel Payments Bank. Anubrata, let me first start with your business. Airtel Payment Bank has seen a 400 crore odd revenue number for the first quarter of this financial year. I wanted to know from you what this means for the company itself and how this helps in sort of growing this payments bank ecosystem, because that growth has seen a little bit of a standby.
Right. So firstly, Vishy, we are delighted with the growth. Equally, as a company, we feel we are at early stages of where we believe we should be. We've grown broadly at a CAGR of around 35 to 40% across all key metrics over the last 3-4 years. And we do believe that we should be in the high double digits in terms of growth. More importantly, if you look at the quarter, we've been serving broadly over 50 million lives every month. And our model, as you know, is a low cost, low ARPU model, which basically means that we are able to deliver services at anywhere between 18 to 20 rupees per user per month and earn revenues of anywhere between 23 to 24 rupees of revenue per month per user. With that in mind, we do believe that we have two opportunities or levers for growth on the financial side. One is the revenue per user itself should go up. Second is the number of users should go up. Fundamentally, in the industry for payment banks, we believe we are in the middle of a digital revolution happening in the country today. There's a 500 million consumer opportunity waiting to be tapped, both as a function of rising per capita income levels, as well as a function of the fact that Digital India is reaching more and more hands every month. As a result, we do believe that the payment bank industry, which is at 150 million lives per month today, should grow rapidly and double over the next few years. And equally, therefore, Airtel Payments Bank itself should grow very rapidly in terms of its user base. This, in a nutshell, explains both the model as well as our outlook.
So I wanted to talk to you about a little bit more about the business itself. You are at about 4 lakh outlets, offering the Airtel Payment Bank services. This is by large now the largest sort of network that exists in the country. But tell us a little bit about the network effect that this has on the payments bank model, because distribution is key, right?
That's a great question. I'll just answer it in a little bit of a de-aggregated way. See, if you really look at the payment bank model first, you will see that there are various players who are operating either in the digital urban space or in the deep rural space, operating only banking points. We've consciously given our ability and our parentage, built what we call a multi-segment business. We have a very large urban digital business. We have a very large rural business, and we have an extremely large B2B business. At a high level, we are India's fastest growing, or one of India's fastest growing digital banks. We have the largest banking network in India in deep rural, and we are the largest microcash player in B2B in India. Now, if you really look at these three businesses put together, what we are seeing is that, as you mentioned, network effects, we are seeing that we are able to manage the transition of a cash note coming in from businesses into cash being handed over to a consumer, be in rural or deep rural, and for the consumer then to finally upgrade himself to a digital banking app, which is what is driving this adoption and is making us in the top 6 banks in mobile banking in India. Therefore, the way we have constructed the business portfolio in itself is making us capture the ecosystem in a more holistic way and gives us more confidence that we'll be able to grow more over the next few years.
Does the lack of lending come in the way of revenue growth, though?
Yeah. So if you really look at what I articulated in terms of the business, revenue growth in absolute is not a hindrance at all, simply because we are not tapping the number of lives which the model can tap. And that itself should give growth. Equally, the amount of ARPU growth, even if it is a few rupees per user, does not really require the ability to lend. However, our position and the position of the industry is that actually the model is touching so many lives at a point where a lot of lives don't have good or any credit records at all. It allows us the ability, if given micro lending, to transform millions and millions of lives at scale, which very few regulatory structures from a small finance bank to universal banking actually allows. So our simple proposition is that if payment banks are allowed to micro lend, it will serve India well.
Is that something you're asking the regulators as well?
I think a formal note was put in front of the regulators, presented to the regulators last year, sometime in October, November. And of course, the industry always remains hopeful. We have the most progressive regulators on the planet, in the most digital country on this earth.
Okay, fair enough. I wanted to talk to you also, for the last couple of questions, but I wanted to talk to you a little bit about the state of the payments bank industry at this point in time. Now, there are two, it's you and Fino, the other, who have that profitability metric in their favor, who sort of have a business to talk about. But some of the other players are pretty much left at the fringe. I'm just curious to understand, is this because of the model, or is this probably each individual entity taking a call of its own business?
Yeah, no, I think it's a very simple insight. Essentially, you're trying to deliver a low cost model built on two principles. One, you use the India stack, which is UIDI, you do eKYC, you use NPCI, you use UPI, and you're able to offer a cost of banking service at a fundamentally different level from traditional banks. The second, you're trying to allocate fixed costs of operations over a very large user base. Now, obviously, if you put these two principles together, you need a decent amount of scale, for which you need time and the necessary appetite, before which you will turn into a low cost per user base. If you see the payment bank model today and the number of payment banks in the country, anybody who spent 4 to 5 years in operation has therefore become profitable. It's not just Fino or us. I believe India Post payment banks have also turned profitable, and of course, as you know, Paytm payment banks is also profitable. So all these banks have the characteristic of having now today a decently large user base, either transacting on a platform or having a bank account, and therefore driving down cost of operations.
Lastly, future in terms of your business, is payments bank sort of maturing into a small finance bank, something like that you want to consider, or do you think the payments bank business itself is mature enough to stand on its own?
See, I think a payment bank model with the ability to manufacture more products, be it a small deposit, be it a small loan, is a very powerful disruptive model in the country, because the fact is that millions and millions of Indians need to be touched with very small transaction, micro lending and micro insurance products. We believe the model is well suited as long as it is allowed to offer more of its own products, maybe on its own balance sheet. And therefore, we remain fundamentally positive about the state of the industry.
Thank you so much, Anubrata, for joining us on this conversation. Pleasure talking to you.